Hi guys, it's me again. I hope Lesali Shapo. And yeah, so the second chart that we're going to look at today is VIX 75. Every Sunday I give you about 2 to 3 charts of instruments that I feel like it's worth sort of looking at them or trying to get trades from them. So here I'm just gonna do a thorough top-down analysis like I did with the Nasdaq that I just gave or that I just posted a few minutes ago. So if you're new here, make sure that you subscribe and you hit the bell icon. And because this is where I share videos where I do top-down analysis, tricks, and how to approach a chart. And but if you're interested also in this style of trading, you can just text me on this number so that on Telegram, so that we sort of I take you through all this, the process from the basics until more advanced stuff, so that you can also know how to approach the chart this way. So let's get started. As always, make sure that you stay throughout, because at the end that's where we decide on where this is most likely gonna go from here. So as always, we start with the highest time frame. So on this time frame, we can say it's our monthly chart, and it looks something like this. So the trend line is here. We are outside but not yet broken. If you watched the previous video that I made it very clear to say that as much as we are around the support, but we don't always predict on what to do, where the price is going to go, or which zone is going to be broken, or the trend line and stuff like that. But when you use the structure that you have, you can make a decision to say, based on this structure, yes, we are at the support, but this support seems like it's going to struggle very much to hold the price, which is what we said in the previous video where I made it. I think it was around on the weekly chart. When you get to the weekly chart, we will talk about it as to like why I was saying that it looks like this thing might end up going down to sort of to reset and hit what the next support, which is fresh, and it looks very strong, because when it was formed, look at the takeoff from it, and from there the price never went back to it. Yes, we are not yet broken these lows here, but we've got higher chances of breaking them. I will explain further when we get to the monthly. So to the weekly. So what you need to take from this one is that our resistance is still up there, so we don't want to talk much about it, because it's going to take the price very long time to go back there. And the support, we can still this one here, the low has definitely been taken out. So you can say, you can just put a horizontal line there to see if it's going to be taken out. It's very tricky to draw it here, because it's a monthly and we don't want it to look like this, you see. So you can just put a horizontal line here. Let's do it this way. You can just put a horizontal line here, basically here at this low here. So you put that horizontal line so that when you're moving down to smaller time frames, you can see when the price is approaching this. This is the most extreme point you have here before the price can now be calling for this support here. So once the price is approaching that, you will see when you're moving down to smaller time frames. So the resistance is still quite far. So that's all that we have. We are too closer to the areas of support, and selling, not a good idea, but it doesn't mean you can just go and open the chart and start buying. That's also not a good thing, which is why I told you that on this one the price has got higher chances of just going past those points, because those points have been hit before, they are not fresh, and the structure that we had on weekly also suggested that the price still has higher chances to keep on pushing to the downside. We will speak about that one, about that one when we get to the weekly. So here all that you need to know is that we are approaching the most extreme point at your support before we can now shift our focus to the next support. So that's all that you have. So the price is moving nicely and very strongly. Look at these candlesticks to the downside. So let's check what is happening on weekly. Why did we say that this might end up taking out the zones and stuff? If you still remember, this was a very strong area of support. It was a very, very strong area of support, because when it was formed, it was during the time when the price was moving down like that. We had a trend line to the downside. So when we started this move from this, we then moved up and broke the areas of resistance, and we also broke that trend line. So meaning this area of support was very strong. which is why when it came here, remember in the previous video, if you haven't watched it, I showed when we were asking for, when we were looking for trades here, we got them, we were targeting the next opposite structure or the next opposite level, which is the resistance. And even from the resistance, we still got some trades. We exited here because what, like I said, this is a zone, this is a very strong area. Like from here, remember we're still here, this is a very strong area. So which is why when you're coming down, you exit. We are not saying when we were coming down, we didn't know it was going to be broken, which is why you exit. You exit because a zone will always be active until it is taken out. It's only when the price is there and then it's forming weird structures, then you can say, oh, based on this structure, this zone might not hold. You see, when you're still coming, we cannot predict, especially a zone on higher time frames like this. We cannot just predict and say when you're coming down and say we were going to go all the way down like that. But when you're coming down and your trend line was here, you were expecting it to sort of bounce and go back. But when you're seeing this, just before your trend line, you can see that the bulls were trying to go up, they're being rejected to the downside. So you can say, oh, based on this bearish pressure that I'm seeing here, this might end up challenging the trend line. And that's when it went down and took it out and even took the areas of support. You see, you are making that decision based on how the price is approaching that structure. When you're still up here, you couldn't make such assumption to say it's going to be broken. You see, because it's a very strong trend line, this is a very strong support. So you hit the support, you are forming these structures. You can see that, oh, the bulls are not very convincing. At an area of support, we expect to find more buyers that are going to push the price up. So when they are allowing the sellers to do this at their zone, it's not a good sign. The sellers might end up defeating them and take their zone out, which is what you saw there. You see, that's how you make your decisions. You don't predict way in advance that something's going to be taken out. You wait for the price to get there, see how, like, just check how it is reacting at that zone. Then you can say, oh, based on this reaction, we are most likely going to go to the other side. That's how you do it. So this is that point that we said is the most extreme one, because this one has been taken out. If I can zoom in, you can see that you have definitely been playing below it. This one here, it has been taken out, which is the one that we said when we're going down, it is the one that started this move. So that very strong area of support on weekly has been taken out. We are now at the next one, which is also around the same level, because this one starts here and it ends there. Even this one, when you're going down, you had the trend line, it broke all of that, it pushed up, it broke the areas of resistance. So both of them, they're very strong. The first one has been taken out, so meaning the sellers are very angry. And currently, yes, this might hold the price, but currently the structure is really not looking so good, because you can see that even the price action, if you look at, how can I put this candlestick, I don't know how it's going to close, but you can see that even when you're going down, the bulls try to form their own bullish pin bar there, but the bear still managed to push down to below it. When they're going below this bullish pin bar, that's not a good sign, because when you have a bullish pin bar, it means the bulls are the ones that are rejecting the price. But when they are trying to reject, the sellers still come in and break the range to the opposite side, to the downside. Then they are fully defeated. That's when you're like, oh, okay, the bulls were trying something here, it didn't work. So that's when you can say the bears might still continue pushing in that direction. You see? So that's what we have here. So currently, because of all the structure that we are having, we can put our bearish trend line like this, because we definitely, during this move to the downside, we did have a lower low here and then we went down. That's why we have a trend line there. And in terms of the nearest area of resistance, if you put it there, yes, I'll give it that, but there's also imbalance here. There's an imbalance there. That's a tight candlestick there. So where we had like the old area of support, the price tried to sort of react to that and go up, but the bulls didn't have all the strength to do that. They ended up being defeated. So that's where we have what? That's where you have your imbalance. That's where you have your nearest area of resistance on this time frame. There's your bearish trend line. So what you can expect here is that, what you can say is that should the price take out this, remember this is that most extreme before we targeting the next one. Should the price take this out and start rallying like that, then you can most definitely look for selling trades here, because it will be a confluence with the trend line and this zone is the one that would have broken your thing, your support. So that's when you can say, if this is taken out, then I can look to sell. Wherever it turned, I can exit there. The next one at that monthly support that you saw on monthly chart. So that's what you can, that's how you can approach it. So currently, until it is broken, we're not gonna say it's gonna be broken, but this might need to be careful. It like I said, it has a chance to even go and reset at this support, but it needs to first take out the current support. So should it go down to like around the support, and then it's giving you some vibes to say that the bulls are rejecting, trying to sort of defend their line, their first area of support, their last support, because this one was taken out, then the next one is there. Should they try and defend it, then yes, you can give them a chance, and then you still had will not neglect that, because this gave me a move down and went lower than this support, which is why if you get reasons to go long there you are exiting. So that is all that we have here. You just need to mark this as your nearest area of what? Of resistance, this one here. And then the support, we said we're just going to put the horizontal line. There you have your trend line. So let's move down to daily and see what is happening on daily. So we can remove this for now. And let's see. You can see, look at this. Remember, this was around the old area of, even though you had already broken it, but at some point you were struggling to close below it. Let's put a horizontal line so that I can remind you of the time when we were discussing this one. Yes, we are discussing this one. You hit it here for the first time with the pin bar, but you failed to go above the pin bar and continue like that. So, but rather the price came back and went lower than the pin bar. So whatever that the bulls were trying to do, forming that bullish pin bar, the bear still managed to reverse that. And in this case, they even went down, and that's when they closed below. Because when we did the pin bars breaking for the first time, we were struggling to close below this. Now, for the first time, we closed below it. Look what the bulls tried to do. After the bears closed below that thing, the bulls tried to come in with what? Bullish engulfing, which is a good sign. Maybe you can say, oh, maybe they are still there trying to defend that level. This one that we marked here, they are trying to defend it. But rather, they, after forming that bullish engulfing, they never did anything. It was just a bullish engulfing, and then the price stayed there, like within this, for about a week. So the bulls, they just did this. They tried to form a bullish pin bar, but they didn't go anywhere. They are not challenging any structure of the bears. Look what the bears are doing, which is why I'm saying when you're making your decisions, it should be based on the structure that you're seeing. Look what the bears are doing. The bears are rejecting the price. We're seeing candlesticks that look like this. So which means the bulls are trying to go up, but the bears started, they end up pushing them down, forcing them to close there. So these candlesticks, they're showing us that there's too much pressure to the downside, which is why even in the last video, the one before that, I said there was a very nice trend line. I can try and find it because I still remember it. Yes, we were here. Yes, we were here. We had a very nice trend line, a very nice zone there. But we said, no, we're not going to take it because of what? The structures that we are seeing on daily. Remember, though, that trend line is somewhere here. It's somewhere here. And we said we're not going to buy this because of what daily is showing us. This is showing a very strong pressure to the downside on the higher time frame than the one that we're trying to buy from. That's how you make your decisions. To say the higher guys or the bigger guys, the daily, which is bigger than the H4 that I was trying to buy from, daily is saying no. There's too much pressure to the downside. So let me just wait. Let me not take a trade to the upside then. That's when the price just went down and took out that trend line and then continued going to the downside. You see? But if you just open one time frame and try and make a decision based on that time frame, like say I'm gonna buy or I'm gonna sell, you will end up missing the information of the bigger structure, like on the bigger time frame, the bigger picture. You won't know where you are. You will try and buy inside an area of resistance, you see, because you didn't check the structure on the bigger time frames. And look what they did when they were pushing down. You can see this, the bulls are trying to come in, but the bears force them to close with what? And the day with a bearish pin bar, and they still close they still take out the range, and then they continued like that. We had the same here. They still formed another one, which is a bearish pin bar, and then this the range. They still took out the range. Then they continued like that. You can see they're still pushing to the downside. But yes, they're slowly approaching. If you still remember, they're slowly approaching this. So it's only a matter of saying how are they going to react when they touch that around that what is it? 511584. Around there. How are they going to react? Which is what? This point here. When they're touching this, how are they going to react? Because yes, their move looks very exhausted because it's been going down for a very long time. And remember, the price usually moves like this. When you're moving down without any pullback, the pullback might be very extreme, but we are not going to predict that. So what you can do is that once the price touches this, you're going to check how the price is reacting from that, and then based on that, you can maybe get a trade to go long, but this has to be areas where you're exiting. You can't just target that weekly area of what? Remember, that's a weekly area of the nearest area of resistance. So when you're targeting, when you're going up, the price might still touch this and go down. You see? So you mustn't neglect the structures that you find on your way to the bigger area of what? The opposing area. So there are small ones on the time frame that you're trading, so you must still use them to exit your points or your trades. So now currently you can see that there's a comment that I got where a guy was saying, since I made the video, he's been searching for trades to go long, but he never gotten anything. The price keeps on moving to the downside. Exactly. So which is why I'm saying you wait for confirmation. You don't get anything. Why are you trying to buy when you can see that you have a trend line, a bearish one, hoping that, let me just give an example. The price is moving down, you have a bearish one, and then it does this. Why do you want to buy and do that? Why don't you first wait for the momentum to the downside to be reversed? Then you mark this, and then you try and catch this to go up. Because until there's like a strong what do you call this, maybe a momentum shift or something that's gonna point give you that thing to say this looks like the price is reversing, because just a small pin bar alone now is not gonna cut it, because you can see that even the bigger time frames, everything is pushing to the downside. So for you to try and put your trust in the bulls, they must first give you something concrete. You see, you're not gonna just say I'm waiting for price to go up, and then you're seeing a bullish candlestick, and then you enter and say the bulls are reversing the price. That's nothing. That's nothing. They need to give you more than that before you can trust them, because currently the odds are stacked against them. So let's check what is happening on H4. Yes, you can see that H4 is moving down, but the momentum is not so strong, because it's making very small candlesticks, but it is still making strides to the downside. So in this case, let's see what do we have. Look at this. The bulls, they did have a very nice candlestick here, but it's just that it did not do anything. And look at this. They're trying to push up. The bears are forcing them to create candlesticks that look like this. These are showing that the bears are exerting a very a strong force. So this alone, we can't use it to say the bulls are coming in. They must do something. They must do more than that for us to trust them, because everything is pushing down. So for us to say they're going up, just one candlestick, it's not enough. So currently we can see that the low was here. We are now at a lower low. So maybe you can put this like that and see. I'm gonna just check how the price is gonna react when it gets to the trend line. But this zone here is not a zone that you can try and look for trades from, because I'm sure you don't even have like a 2:1 RR, and you are approaching what? You're still inside that. So this is where, like, if you have a trade, you're just trading your stop loss, but for you to enter in the opposite direction, you will need a very concrete what do you call this, a very concrete something that is the price is going to show you that it's about to reverse. Because just one candlestick or two candlesticks to the upside, if they don't break any structure of the bearish trend, then you can't yet trust the bulls. They must do something. They must upset the sellers and defeat them before we can give them a shot. You see? So that's what you are having. So maybe if the price was, but preferably it should maybe continue dropping below this time frame, until it does what? Until it touches this. Remember this? I'm not sure if you can see this line here. We spoke about this one, that 5115484. Until it touches that, then you know that, oh, at least now we know we have reached the extreme of what? That weekly support. Then maybe when the price is reaching that extreme and then it comes back strongly and then breaks this, then you can take a buy and hope that it will continue like that. So until that happens, it's very difficult to trust the bulls currently. Like, it's very difficult. You'll end up taking losses that are not necessary because you're trying to catch a snipe, or you want to be the first one to buy when the price is going up. It's going to chow you until you give up. When you give up, that's when it's going to go up, change the momentum, and then it takes off, and then you'll be frustrated. But you forgetting that you were entering trying to be smart. You must wait for the price to show you what it wants to do, then you try and join that. Don't tell it what to do. Don't tell it what to do. Wait for it to show you that it wants to go up. It will change the momentum. Then you can say, oh, I see the bulls, they want to push up. So let me try and look for an area where I can join them so that they don't leave me behind. You don't tell them where to turn. No. They will turn, then you'll be like, oh, okay. It looks like they're gaining some momentum. Let me try and join them. You see, because if the price is falling strongly, everything pointing to the downside, and then you get one candlestick here that is bullish, and then you enter there, hope that it will hold until yes, it's possible, but for you to get this, it's gonna take you're gonna take a lot of losses before you can catch that. So it's not worth it. Wait for the price to turn, then you can say momentum is shifting, the balls are coming in. Then based on that, I think now it's safer for me to try and join them. So that's it, guys. I think I'm gonna end this one here. So that's all that I had for you regarding VIX 75. So this one, I don't know if you still remember, we used to have some trades from here. Imagine if we didn't close them and then we're still holding. That's a lot. But like I said, when you hit an opposing structure, you don't predict that it's gonna be taken out, especially the one on the bigger time frames, because most of the time you will predict that it's going to be taken out, and then you see the price bouncing, it goes up, it takes some of the profit that you made there. So it's not worth it. When you get there, make sure that what you made is more than enough, and then you exit, you start searching for new trades. That's what you call consistency. You don't have to try and be greedy and say, had I held that trade, I'll be making this much now. There are times where you'll be feeling that way, but it's not worth it. It's not worth it, because there are times where it will hit that zone and then it turns, and then you'll be, oh, at least I exited. It's a good thing that I exited the trade. You see, if you are still holding, you'll be frustrated. You see, you don't know what's going to happen, which is why you must be happy with what you got. You must be happy with what you got. So this is basically how I approach a chart. That's what I teach when it comes to the price action, reading the price action, knowing which areas are sensitive and where you should be searching for trades, how to enter those trades. So that's what I teach. That's what I go for. That's why on my chart, you will never find what do you call them, indicators, because I don't use them. Because I want to make what do you call this? I want to make decisions based on what I'm seeing on the chart, based on the shapes of the candlesticks, the structure that I have on my chart. Based on that, that's how I want to make decisions to say, I think we can start selling or we can start buying. That's what I've been showing on this channel ever since I created it. When was it? But it was this year. I think it was the 2nd of May this year. Yes, that's what I've been sharing here. So if you're new here, make sure that you give us a like and you subscribe, and then I'll see you in the next video, because every Sunday I think I post about two charts here on what you can expect from. Most of the time we do Nasdaq and VIX 75, sometimes US 100, and then I'll add some other instruments, those weird instruments from Deriv as well. I'll add them sometime during the week. So, but for now, that's all that I wanted to share with you guys regarding what? VIX 75. So this is what I teach. This is what I teach in terms of how to approach the chart. It shouldn't look like it's difficult. It's not like very easy, but at the same time, it's not so difficult. If you know which areas are sensitive, what is the bigger structure, what is the structure on your smaller time frame, then if you're trying to look for trades to go long from the current price, is it a good thing, or should you wait for a certain price to be hit first? Stuff like that. That's how you should, those are the questions that you should ask yourself when you're trying to decide whether to enter or not. Then you'll see that some of the trades or some of the losses, you're just going to avoid them. They will be unnecessary. But if you don't know where you are, you're just going to go in, you see a pin bar on M15, you start buying and saying, I will hold for 3 weeks. But you didn't check what is the weekly chart. You're trying to hold for 3 weeks. Don't you think that that 3 weeks that you're trying to hold for might interfere with the structure on weekly if the structure that side does not agree with you buying? You see? But you can do that quick in and out, the smash and grab. Make sure that it's intraday, in and out, in and out. But if you want to hold for long term, make sure it agrees with the bigger structure. So I think I'm gonna end this one here. I'll try and give you more videos maybe on Tuesday when we are just updating some of these charts. So I'll see you then, guys. Sharp sharp.